Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Monday, January 24th. And boy, oh boy, hope you guys are wearing your seatbelts because we are in for quite the ride here. Bitcoin now is down officially 50% from its all-time high, which is actually, interestingly enough, our fourth 50% down move over the last 4 years. So although it may feel like the sky is falling, this is, par for the course for Bitcoin, really. But I know that doesn't really provide much solace when we're in the midst of this sell-off here. But CJ, how are you doing today, my friend?
Doing well, Monty. Interested to check out the markets. S&P down over almost 2.5% right now. So obviously Bitcoin and the crypto market collectively feeling a little bit of pressure from that. And I don't think it's going to end until the equity market truly can find some aspect of stabilization. But as of now, there's really none to be found.
Yeah, the S&P looking very, very weak. And, again, I think this weekend we saw a brief instance of a little bit of relief on low volume yesterday. There were no traditional equities trading to drag down Bitcoin. So we kind of bounced. We saw that in a couple assets like Phantom and Luna. But today, traditional equities down, Bitcoin's down, the market's down. So it should be setting up for a tough week here. But we'll dive into some charts and some headlines as well. What do you say, CJ? You ready to dive into some technicals?
Yeah, absolutely. However, would you like to start with the Biden administration piece about the crypto report scheduled to be released as early as February? That
Yeah.
could be really interesting for the market and how we have kind of regulational clarity that we've always talked about and have really harped on. But Monty, if you want to go into that one a little bit.
Yeah, sure thing, CJ. So like you said, this headline hit this morning, Biden administration to release executive order on crypto as early as February. So that is literally 1 week away. So this could be right around the corner. And like CJ said, one thing that is, has been a vitally important conversation over the last, decade in crypto is finding out how to properly regulate Bitcoin as an asset, as a commodity, whatever the case may be. And so far, it's been kind of a battle to see who has the most control over regulation between the SEC, the CFTC, and the OCC. But now it seems like the White House wants to kind of take control of that, and all the regulation would come centrally from there. That would be nice in the sense that it would give us more clarity, more directionality in a sense of regulational clarity. So very, very interesting. And these things tend to be a catalyst for price action as well. So we'll see. And February is just right around the corner. So this is a very, very this is coming quick. So going to keep an eye on this, but ultimately the Biden administration senior officials have met multiple times to discuss the directive, which will be presented to the president in the next few weeks, according to Bloomberg. So we'll keep our eye on that. Always good to get some regulational clarity, though, in my opinion.
Absolutely. With that being said, why don't we get into some charts and take a look at some of this carnage. All right. So starting with the S&P 500, nothing completely changing as of yet, but just want to point out that, regardless of any policy, like we are still most oversold level, in terms of the oscillators that we've been in comparison to, March of 2020 at the absolute lows. So quite interesting there. Even when we did hit the most oversold level, we still did continue to go much lower. So that's something to be said there for the S&P 500 index. Also, one thing that we've really liked to measure and keep an eye on lately is just volatility. And that can be measured by this particular indicator on the bottom here that you see these green tints. That's instances where we have extreme volatility in the marketplace. And as you can see in uptrends, and in many cases, it's actually marked like bottoms. And you can see that it absolutely went crazy when we had the sell-off earlier during the COVID lows. A lot of volatility, a lot of sell pressure, moving the market around in that instance. Somewhat of a similar thing going on here today, obviously, though, to a much lesser degree. But, until we see any type of relief, there's not much to do. We talk about playing the meta game in crypto a lot of time, but sometimes there is no meta. Sometimes the meta is pain. And I think that's what we're experiencing right now. Going over to Bitcoin, we fell below 35K last night and are now at 33.6. seeing a lot of similar metrics in terms of like the oscillators, volatility, and oversold levels when compared to the S&P. And the same statistic applies for the COVID lows. When we hit that low of about 4K in March of 2020, we had oversold levels that are somewhat comparable to where we're at right now, which is quite interesting. Also, you have a lot of volatility beginning to form on the Williams VIX fix indicator down here as well. So we'll see if we bounce from these levels. Really, I can't say that there's any immediate floor for Bitcoin, even though we do have a TD sequential by 9. And that just has to do with the weakness and lack of resilience in the equity market. I don't think anything's going to change in Bitcoin if nothing improves in the equity market. That is the dominant player in the global pool of liquidity that influences risk taking and how people like to make particular behaviors. Regardless, you would expect in a traditional kind of range bound market for this TD sequential 9 to kind of rebound to the moving average. But in this particular instance, I don't know if you can be as confident just because of all the other external factors kind of going on right now. But either way, I'll pass it back to you, Monty. Interested to hear your thoughts as well, my friend.
Yeah, thank you for that, CJ. And, you hit on one point that I was definitely, going to mention there as well, is that we have lots of TD9s across the board today, and not just Bitcoin, but many assets across the space. But I just want to reiterate your point there that, although the TD9s are very useful in predicting momentum reversals, when we have this sort of macro backdrop that's really influencing price, it needs to be taken with a grain of salt. And right now, I'm reluctant to enter on any of these 9s because of what we're seeing in traditional equity markets. So just take that in stride and remember that TD9s, although important, they're not the be-all, end-all of technical analysis.
I do want to share one tweet because this has to go with what you said just now regarding sentiment. And in many cases, there will always be bulls on the way down, regardless of when you see a bottom or if you think that a bottom is coming down. So this is an interesting tweet from Dan Crypto. I'm not sure about that account, but anyways, basically, this was a pull or several pulls all the way through kind of the Bitcoin down move that we've had ever since the past couple of months. All of these pulls are wrong that are looking for positive price action, except for only one where we actually did go down. But overall, it's a very common thing towards the end of bear markets for market participants to still remain optimistic and to be jumping in the bottom when in reality, and many times bottoms take a long time to materialize and are actually quite boring. And they happen when very few people are around. The only time we really had a true V-shaped recovery in crypto was in the COVID market crash. And that was because of a fundamental reason. We had so much liquidity injected into the market after that. So I'm in no rush to buy necessarily, just because of those kind of reasons, but interested in your thoughts as well, Monty.
Yeah, no, you're exactly right, CJ. That seems to be, the historical sentiment is that when we're on the way down, people try to catch this bottom and it ends up biting them. So I'm not in any rush right now. I'm going to be patient with this and just keep waiting for signs that the traditional equity markets are reaching a bottom here in the interim. And I'm just not seeing that right now. So, yeah. But I think that's all we got for today. Any parting words here, CJ?
The only parting words I have is that this kind of goes a little bit earlier when we were just talking about the meta game, but just make sure that I'm not saying go short or anything, but I'm just saying make sure you have a flexibility or a way to sort of go both ways in this market, because in many instances, disciplined trend following is one of the best strategies that I like to employ. And right now the trend is pain and downward price action. So that's all I have to say, though, Monty. And thank you guys all for watching today. I hope you have a wonderful day in the world, wherever you are. If you'd like to learn more about Market Rebellion, our trade insights that we take on a daily basis, as well as an education curriculum and a pro charting platform, you can check out the link in the description below. But thank you guys all for watching. I hope you have a wonderful week.